So you have just released your half-year results. Walk me through earnings and what it has to say about operations at BHP.
So another strong set of results from BHP for this half. If you look through to underlying operations and financial performance, another solid half. So $13.9 billion EBITDA, that's up 5% period on period. Net operating cash flow up by about 30%. And balance sheet remains strong. Net debt sitting at $12.6 billion. All of that coming together has allowed us to declare an interim dividend of 72 US cents per share. We did have a couple of more material exceptional items for the half, including the writing down of the value or the reassessment of value for BHP's smallest of smallest businesses, being our nickel business, and then a better estimate around what's going to be required to bring to a close the claim in Brazil, federal prosecutors' claim in Brazil, associated with a dam incident we had back in 2015. But underlying business performance, performing really strongly, and that's shown through in earnings and or underlying earnings and dividend we've declared for that.
Yes, and I want to get into that underlying performance, but first, because you had pre-announced that $5.7 billion non-cash impairments tied to the Samarco dam failure and also to the nickel operations. I just want to talk a little bit about that first. In terms of Samarco, do you feel like you have your arms around the costs associated with that situation and the cleanup of that disaster?
Well, so this is our best estimate as of today, of course, and it's based upon activity that we saw on the ground over the course of the past half. That's given us greater confidence around how to estimate what's going to be required to bring that federal prosecutor's claim to a commercial settlement. And all parties appear to be motivated to reach a settlement, and our focus certainly remains on that.
The nickel business has been getting a lot of attention because throughout Australia, Western Australia, we've seen nickel prices come off, production glut stemming in large part from Indonesia. Your outlook on that commodity and what it means for your own operations, both in the near term and long term.
Sure. So maybe a little bit of context here. Within the BHP portfolio, we have the iron ore business, the copper business. We're developing a great business in potash. We have a metallurgical coal business in Queensland, which we've been through a period of consolidation where we've brought that portfolio down to just the best of the best coals now that stand to benefit in a faster decarbonizing world. And then we have the nickel business. This is the smallest business within BHP. It has been loss-making in recent times with a glut of supply that's come out of Indonesia in the past 12 months, and we expect is going to persist for some time. That's caused us to step back and reassess the carrying value of that business, and that's resulted in the impairment that we announced last week. As to how long this is going to persist, we think it could last up till the end of this decade. So we have flagged that one of the considerations that we have underway currently is whether we move our Western Australia nickel business into a period of care and maintenance, but no decision taken yet on that. There's still a bit of work ahead of us to make that final determination.
Why do you think it could last so long? Is it just because of how much production is coming out of places like Indonesia? Is it a demand? Is there a demand piece of this since nickel's tied to things like electric vehicles and we've seen demand there slow a little bit? Is it something else?
No, so actually on the demand front, things have been at the high end of the range that we had estimated, and in large part because of the electric vehicle thematic. And so we believe that the demand outlook remains strong. This is really a supply side consideration. There's just been so much investment that's gone into what's actually a lower grade of nickel, but there's been a lot of investment in that in Indonesia, and that's meant more supply on the market. There's also been a change to the way that this commodity gets traded at the key exchange globally, where that lower quality nickel is now impacting the price of higher quality nickel, which is the class 1 nickel that BHP produces.
Understood. In terms of metallurgical coal and also in terms of iron ore, when we talk about steel making, what is your outlook for global demand, especially at a time where there's a lot of focus on China, some of the weaker than expected macro data we've seen come out of that country, and challenges that are ongoing with the property market?
So here is the interesting thing. Over the course of the past 12 months, notwithstanding weaker than anticipated growth in China, the sectors of the Chinese economy that have been performing strongly have been steel intensive. So we've seen the 5th year running of over 1 billion tons of steel demand and production in China. That's meant healthy demand for iron ore, and prices have held up better than most people had anticipated. Our expectation is that in the year ahead, we're likely to see another year of 1 billion tons plus of steel demand. And we could say the same thing about other commodities. Copper demand was stronger out of China in the past year than most people had anticipated. We expect a bit of recovery in other economies in the year ahead. That coupled with some of the supply side factors in copper, where there's been more disruption to supply on the part of other players in the market than people were forecasting, are likely to mean the market will be in a bit better balance, and that should provide some price support in copper as well.
And you continue to ramp production of copper in some of your key locations.
We are. So 7% increase in copper production over the past 12 months. And we're building out what we expect is going to be quite an attractive pipeline of growth options, both in South Australia, where we've consolidated a recent acquisition, unlocked $50 million per annum EBITDA of synergies 6 months ahead of schedule. So that integration is going well, and we're looking to expand that business over time. And we're developing further growth options in South America. In fact, BHP has 2 of the top 3 copper resources globally in Escondida and South Australian copper. So in a world that's going to need a lot more copper in the coming years, BHP is pretty well positioned.
Yeah, and we could talk about that, the long-term story of energy transition, electrification, advanced manufacturing, and what that looks like as you have a rethink of supply chains as well. Short-term, though, at least some of the futures markets have been a bit softer, at least than what we've seen in recent years. I guess walk me through the balance between near-term dynamics across some of these commodities and the outlooks, and longer term.
So let's stick with copper, if we may. With the weakness in some of the developed economies over the past year, that's led to slightly softer copper demand, even as we saw stronger demand coming out of China. Now, what's happened in recent months is that there's been a number of supply-side disruptions and some other players in the copper sector reducing their forward guidance for copper production. All of that, I think, is resulting in a slightly tighter supply-demand balance for copper. We certainly see that coming through in the pricing of TCRCs, so the treatment charges for copper concentrate, which have narrowed quite substantially in recent times. So the outlook next 12 months, and certainly over the medium term for copper, we believe is quite positive. We've been public in stating that over the next 30 years, the world's going to need about 2 times as much copper as it needed over the past 30 years. So companies that have large resources positioned well on the cost curve and with all the capabilities to expand those resources, I think are going to do quite well in the period ahead. And BHP has been quite deliberate about positioning ourselves in that regard, both in terms of resources and in terms of capabilities. In the case of iron ore, as the Chinese economy continues to evolve, like any other major economy as it grows and matures, we would expect it to become less steel intensive over time. But there will be a period of plateauing at a high level of steel demand in China, and that's what we see currently. I mentioned earlier, 50-year running of over a billion tons of steel demand and steel production in China, expecting another year ahead, probably about that same level. But what we've done as a business is we've moved ourselves down the cost curve. We've become the lowest cost major producer of iron ore globally now for a number of years running, and have worked very hard to control costs in an inflationary environment. And at the same time, we've been investing in improving the overall quality of our product suite to ensure that we're positioned as best possible to compete in what we believe is going to be an even more competitive market in the years ahead. Metallurgical coal, we've been through a period of consolidation. We announced a few years back that we wanted only the best of the best quality coals. We announced a final stage of divestments this year that leave us with a smaller portfolio of higher quality assets that are increasingly in demand by steel makers who want that higher quality coal to help them reduce the emissions intensity of their steel production. And that's resulting in expanding premiums for the sort of coal that BHP now holds. Finally, potash. This is a fantastic story. It's been a long time in the making, but in a world where population is growing, where the world is demanding ever more sustainable agricultural practices, there's going to be steady growing demand for potash, which is one of the key fertilizers. And BHP has the best undeveloped, now being developed, greenfield resources in the world.
And in Canada, any kind of update to give us on the Jansen development?
So I was there earlier in January, and it was great to see the energy amongst the team on the ground there, and all the work that's happened in terms of developing the underground, some of the work on the surface. Project remains on track in terms of schedule and budget. In fact, a little bit ahead on schedule. We've now said that first production will be in late 2026 versus the original plan, which was for 2027. That's for stage 1. In the past half, we announced the second stage of Jansen. First production from that stage will be in 2029. Together, those will be the largest potash mine in the world, and this is going to be a high margin, very attractive business for BHP long term, with more growth options ahead of us.
So, given your unique vantage point as the CEO of the world's largest publicly traded, world's largest listed miner, outlook or what you're seeing in terms of the economic picture globally, how are geopolitics factoring in, if at all?
So clearly, with everything that's happening on the world on the geopolitical front, that serves to illustrate just how uncertain and volatile the world is today. BHP is set up to deal with that sort of environment. We have large assets that sit at the low end of the cost curve. Being at the low end of the cost curves allows us to generate healthy returns at all points in the cycle. And the particular commodities which we've chosen to remain in are those commodities that stand to benefit greatest from the big megatrends underway long term that are going to shape the world around us. And these are the trends of population growth, urbanization, industrialization, rising living standards, and finally the need for better, more sustainable agricultural practices. We've set this portfolio up for success over the coming 2, 3, 4, 5 decades. And it's a pretty exciting time to be in the industry and certainly in the businesses that we're in.
All right, final question for you. Are you still acquisitive, or are you happy with the portfolio you've developed as is?
So we've been clear that as a company, there's many opportunities to grow value. The single biggest opportunity ahead of us is improving the productivity out of the assets that we have. We then have the ability to get more copper units, more potash units out of the ground more quickly to meet growing demand. That's out of these large resources that we already hold. We have been increasing our spend in greenfields exploration, but that's longer dated growth. We've been pursuing early stage entry or getting our toe on or into some earlier stage opportunities, like one that we have down in Argentina. But of course, we continue to be present to opportunities to acquire other assets that meet all of the BHP criteria around high quality assets, large, low cost, expandable. Those opportunities are few and far between. So it's certainly not something that I would say is at the front end of the focus for us when it comes to growing value, but it is something that we always need to be present to and willing to consider.
All right, Mike Henry, CEO of BHP, on the heels of earnings and an interim dividend announced today with a payout ratio of 56%. So great to speak with you. Thank you so much for joining me.